We like emerging markets for long-term investments. Emerging markets do tend to be a bit more volatile and hence a little bit more risky, so you do need to be patient and have a long-term horizon when investing in emerging markets. Currently, we like some things about emerging markets. The strong global growth is a real benefit to emerging markets as they tend to be a leveraged play on global growth. Companies are making better profits and this should lead to their share prices going up. Yields in emerging markets are improving and this again makes them an attractive investment opportunity. And actually, relative to developed markets, valuations are actually quite compelling at the moment. Emerging markets are good for growth. They have got growing populations, which means the opportunity set is increasing. That growing population is actually moving from sort of poor to more middle class, and this is good for consumer spending. The countries themselves are growing. You've got some of the fastest growing countries in the world are in the emerging markets. There's also improving corporate governance. What this means is how companies treat not only their shareholders, but also their employees and their customers. And lastly, emerging markets has got a huge amount of choice, from Vietnam to Russia to Brazil. There's huge amounts of different companies in different locations, and this gives emerging markets fund managers a great universe to pick stocks from. Most people think of emerging markets as a growth story, but there are actually several income opportunities in emerging markets, both from increasing dividends that companies are paying and from government bonds or companies that issue corporate bonds. What this means is that you lend money to a government or a company and they pay you an interest. The asset class on that side is called emerging market debt. Emerging market debt actually is paying a very high yield at the moment. You are taking some increased risk to lend to emerging market governments, but for that you do get paid a premium yield. And in some instances you can actually get above a 6% yield on emerging market debt funds.